Crypto's premier institutional conference is returning to New York on March 18th to 20th. We're hosting one of the world's best crypto conferences for institutional and professionals alike. It's going to be a ton of fun. I'm going to be there hosting a variety of different panels. I'll be doing a fireside chat with Mohamed El-Arian, a different macro panel with Jim Bianco and Joseph Wang. And we're also going to be doing a live forward guidance roundup there where myself, Tyler, and Quinn will be chopping it up live for the guys Emporium. So make sure to get your tickets. It's going to sell out quick. I know it. It's going to be a ton of fun. So come on out and yeah, just hit the link in the show notes and you can go purchase your ticket today. All right, welcome back to another Roundup edition of Forward Guidance. And joining us this week is special guest Tony Greer, the man himself. Honored to have you, man. What's going on?
Oh, Felix, you're too kind, man. You guys are the best.
How we doing, TG?
Trying to stay alive, man. Same as every other day.
Oh yeah. Last night after I shut her down, I was like, I'm drained. The last 2 weeks of trading have been locked in from open to close.
Yeah, you can't explain it to people that don't take risk, and I kind of can divide it with that line right down the middle. It's like people that don't take risk during the day and people who do. Man, the Friday bell is like a church bell for me. Right?
We don't get that enough working remote, like the camaraderie of going down with hanging out. And stuff.
Yeah, sliding down the dinosaur's back after work, man. We miss that now with everybody working from home. That's true. That was a lot of fun, man. I did that for years.
Yeah. That's what this is for.
This is what we live for, Like this has been a blast. I mean, obviously, we're just strung out and exhausted by the Friday close, but it's been fun, man. It's been high octane.
No, this is good stuff. I mean, you can't argue with generational opportunities like this, and it's only going to come along in this kind of high octane, high vol environment. That's just the way it's built.
7th straight day, is it, of over 1% move on the S&P, or 7th or 8th?
Yeah, man. After that really, after that kind of vol compression up at the highs, we failed, backed off hard, couple of big breakdowns, the fucking tariff tantrum, the whole thing. So, the odds are stacked where in the past when this has happened, stocks are higher a couple of months later. And that's kind of still how I'm playing it, Quinn. I'm not able to give up that ghost just yet. I've given back some money for sure. But I'm still, I think, positioned to capitalize if there's a bounce from here. Let's just leave it at that.
I think you can expect that. Yeah, maybe to give listeners so last week we had Jem Carson on, who has been, very prescient with his views on the overall setup here, sort of starting from the top-down macro and getting into some of the options and volatility and inflation outlook. And then, we wanted to bring you on, TG. We've been, going back and forth on markets. We want to get into Bitcoin, want to get into some of the sectors, leadership changes, and just kind of what we're seeing. But I'll start with, you were spot on Bitcoin from the fall for, you're not as deep as some of our listeners in the crypto space, but saw that breakout even pre-election. And then there was that head fake with the fake news Iowa poll and pull back in. And then you caught it right out of the gates and started to get a little bearish as well and exiting up in the mid to high 90s, which we traded notes had similar views, and it just a lot of damage to that chart. What are you kind of thinking from here on that?
The chart's broken, for now, because it's one of those things that kind of like NVIDIA, like when it spends that much time distributing at the highs and making, kind of first new higher highs and then kind of lower highs and really distributes over time and then has a large magnitude breakdown. I've been saying you still got to sell rallies to 92, 95K. A measured move at target that I have is like 70K on the downside. I still think we can get there. We have to get through this, this whole Trump comment about the strategic, crypto reserve, or however you want to call it, strategic digital asset reserve. But to me, it broke the range, it's coiling, and there's going to be one more move lower. And it kind of might rhyme with what's going on in the stock market. I don't know. But to stick to Bitcoin, what's amazing is that when you're not as emotionally involved, as you say, as all the people that are hardcore crypto traders, when you can look at Bitcoin objectively and say like, oh, that's a chart breakout in November, I can go with that because my stop loss can be right here. and I'm not comfortable in Bitcoin. So I had to find times where the stop loss can be like this small and you get a great run out of it, and then it runs out of gas. And you could say, like any other trade you should be saying, if you're not emotionally attached to it, you could say, okay, this trade is still in okay shape, but it stopped performing. It stopped making new highs. Sentiment is undoubtedly positive, and the egg timer on my position has got to go off any minute, ding, where I say, okay, it's been long enough. If this thing isn't to keep going, it's time to sell and move on to something that is. So that's kind of how it worked out, and I got extremely lucky in Bitcoin. I'm not trying to toot my horn. I'm just saying, like, when you're not, reading every piece of data that comes out and just kind of fielding it, it's not as impossible to trade. So I'm trying to get better at it and enjoy the volatility. That's all.
Yeah, it's an unbelievable instrument to have in the toolkit, right? I mean, the moves you can, like you said, you can pin those risk reward when they line up, take 2 big fat pitches a year, and
and the rest of the time, just kind of watch it with like nausea, and thank God that you're not involved. It feels so good to be flat Bitcoin, just being like, oh my God, people are getting mangled and I'm not. It's just awesome to watch, like.
A funny little anecdote I'll share is I love when you really have a non-consensus view and there's no one that gets sort of their undies in a bundle like the crypto crowd, especially when you go against the grain. But it was a couple of weeks ago, and then even most recently last week, I think, when I had a pretty bearish take and got so much heat, and then obviously perfect sentiment indicator, we dipped pretty hard after. And I actually put a similar one out yesterday that was just talking about how this strategic reserve was probably a disappointment to most and a nothing burger. And actually, unlike the other ones, there was way too many people that agreed with me and were replying in unison. So it sort of made me think, oh, maybe we need to bounce a little higher to shake people out of their easy shorts. And maybe we are due for, another revisit of the mid 90s, because those sentiment indicators are just unbelievable.
Yeah, I want to take that framework and apply it to equities, because it's been really interesting just to see it over the past couple of months, where obviously, from the inauguration date until a few weeks ago, we were in this euphoric vibe and this narrative of, it's just going to be gangbusters. And then the narrative has flipped recently, where I'm seeing more and more. There was this denial initially about how, okay, they're going to get some short-term pain for long-term gain and these type of ideas. And now we've kind of flipped the script and we're getting into the recession call, phase of the narrative now. Whereas even a few weeks ago, the idea of even the growth slowdown was a bit hard pressed. How are you guys managing like the expectation of that narrative and where the price is at now?
I am so embracing, Felix, that narrative about the pending recession, man. Okay, it may happen, it may not happen. It's interesting. What's the most important thing for me is that we're going to have this period where the recession bros are going to come out of the woodwork and they're going to stomp their table that we're about to tank the economy. And the narrative is going to get such that the bond market is going to keep rallying. Rates are going to go down. And at some point, this equity sell-off is going to end, because Europe will have divested from the US all they want from the tariff situation. And hedge funds have made the biggest sales that they've ever made in a short period of time. And they're going to be flat. And they're going to be sitting around looking like this. And all the long-only guys that have been sitting here trying to buy these large magnitude bids for their 20-year time horizon are going to go, hey, where'd all the sellers go? You know what I mean?
Yeah.
And so, there may be like, I'm not saying that today is the bottom or something like that, but that's going to happen. I got a feeling that Besant is going to manage us sort of maybe along the edges of a recession where we don't go into some kind of a collapse during the Trump administration. Eventually, some of the things that he's doing that are going to be good for the country are going to filter into sentiment, mood, earnings. And the one thing that I could look back at is that at least, we had this big telegraph of these Trump trades from November through February. Right. And from November to December was people trying to get on board, not knowing what was going on. Then January to Feb to me was like first of the year allocations. We got to be in the markets. They're about to make new highs. Everybody's bullish. And we ran into the tariff blender, right? Where Trump is making comments. He's starting new tariffs. He's canceling them the next day. Nobody knows what the fuck is going on. So there's your volatility spike, right? Trump is basically announcing the S&P probably comes with a volatility premium as I shoot my mouth off for the next 4 years. So we're learning things like that. And I think that the market, I put it this way, it feels worse now than at the bottom of the last 10 dips in the S&P. So I'm not throwing in the towel on the idea that here or within 2 to 3% of here, if I'm allowed to have a little bit of room, is in a buy for a 10 to 20% trade. So that's how I'm looking at it. And sentiment is set up here. It's kind of, it's kind of the opposite of what it was in crypto on when Trump had his hand on the Bible getting inaugurated, the big crypto president. And that's the day we made the all-time high, and it shit the bed a month later.
While we're talking kind of these narratives, one thing I found interesting, Tony, because we were obviously pretty bullish, the Trump trade, the night of the pre-election to
100%
following, and it, despite how similar it was to 2016, it still took people a little bit of time to kind of get up to it, and it did happen quick in November. The move happened. I think small caps topped a week or 10 days after the election. But then what I found kind of adding confidence to my near term cautious view in January and early Feb was the amount of people who were vehemently against either him or his policies and against the prospect of him being good for the market, now telling me how bullish they are. Oh, wow, he's actually going to, take a different approach. He's actually and I was like, whoa, this is kind of sketchy, because all these, I liked when they were on the other side and I knew there was people that still had to buy. And now, like you said, I think we're just seeing that shakeout, because now we're seeing the people that are like, oh, I knew he would, burn things to the ground. Oh, I gave him a shot and I knew. So, and funny, extension of this is one thing. I know you've been short, the TAN, the clean energy solar. I'm sort of wondering if there's a big rebound trade and things like these, where if you think of who the buyer bases are, probably the largest TDS, cases out there might be just hoofing this stuff left and right. I'm kind of wondering, and Elon likes solar. That's an idea.
You can carry that idea. I'm still playing the broad view. You know what? Solar and cannabis rhyme to me, right? They're these two sectors that are incredibly real, right? They're real. Their products are real. We can't deny that. People consume their products. Their products are positive, beneficial, useful across spectrums. It's like, all right, then I got a question. How come everybody doesn't have solar panels on their house? Everybody, and so it's like this thing that got a chance to take off and would have been all the rage. And like Bitcoin, the day Joe Biden had his hand on the Bible, that was the high in solar stocks. And we went straight down from there and got halved, quartered, and whatever else. So, I'm going to stick with the trend that if they weren't on the uptake then the money's just going to be dead. Same as kind of cannabis, everybody get excited for that year or two upswing. These were going to be like consumer staple stocks. And all of a sudden the market said, oh, here comes AI. We have no more money for cannabis bullshit. And so it's like, they now like cannabis is just left for dead. So you might be right. When things get left for dead, that's generally when they find a bid, et cetera. And I'm just going to trade that solar position as I have. It's been a great position, knock on wood, to at least have on the pad while hell is breaking loose. And, you pick up a couple of extra bucks there while you're getting reamed in your longer term longs. And so maybe it's something to consider, but this is at least a very clean and orderly downtrend right now, where I've seen these before, where I keep lowering my stop and look up 3 months later and say, damn, I'm still lowering my stop. This thing is not coming back to bite. So we'll see. Above a significant moving average, I'm out, taking my money, I'm going to run, and we'll see if there's a turn there.
Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through Ledger's secure chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. All right, back to the show. I want to get your guys' thoughts on Europe. I've been looking into it pretty deep this week, and here's how I'm thinking about things, is that you look at the Europe stocks, you look at the DAX, and they've been going gangbusters for quite a bit now this year. And it feels like there's a lot of people that are getting really excited about it. And it's pretty clear the early easy money has been made there. But then you start to see these announcements come from, Germany's talking about a $500 billion investment. There's this fiscal unshackling going on. The Europe trade's been a widowmaker for a decade now, but you start to see these fiscal shifts and it gets interesting. And yes, I think the early easy money has been made, but it feels like, okay, if this is a secular shift, that's something you can actually ride for a multi-year basis. How are you guys thinking about Europe right now?
I saw way too many, like you said, near term. I saw way too many. Chamath was talking about it this week. So I was like, yeah. I'll put this one in the revisit in a month type of thing. I think there's a secular lower dollar. I like being long things, commodities or other, or at least be a positive bias towards these things that are secular lower dollar. But near term, the non-US trade, as Europe, China, everywhere else has gone up 20 and large cap US down 10, like sort of looking actually to maybe, bat down the hatches in the US type of deal.
I'm looking at that trade like, the US has been outperforming, right? Felix, you nailed it for what, like 10 years? It really got pronounced or something like that, right? To me, that's from 30,000 feet up as an old man. That went right alongside with the globalist takeover of Europe, went right alongside with the deindustrialization of Europe, right? Now we're at a point where all of a sudden we get an America First president and people say, oh, this is the time to sell the US and buy Europe, right? There will be merit in that trade one day. It ain't now, right? Right now, the US is going to this is where the parabola is of US outperformance. Do you know when I'll believe that Europe will start catching up and the trade that I'll be in? When they change their politics. This is going to happen here because Trump just turned the revolution into green energy on its head. He just turned putting China at the center of the commodities trade for, wind, solar, all that stuff on its head. So I think that the only thing that's going to get me to jump into that trade is when Europe gives in and says, we need to reindustrialize, we need to onshore, we need to do things to preserve ourselves like those guys overseas are because it's working for them. And that's what the people want. When I see that political change, when there's a Trump or a Polvar in office over there, then I'll think about buying Europe, not before.
Yeah, I love that framework because, man, even if you just look at the ECB, like the Lagarde meeting this week was just so much bureaucratic stuff still going on. Like you compare that talk to like Powell and especially like the fiscal side and Scott Bessent right now. And I think you're right that vibe needs to shift first to see any sort of like execution actually come forth.
Totally, man. I wouldn't short a SPY contract against one of those indices with all the money in the world right now. So I don't care what the differential is. Go ahead.
I feel that, especially this entry here seems. If you were in that trade a month ago, you're sitting pretty, and maybe you can be doing what you want. But and the one thing that I've been trying to glean from this to know whether or not, like you've obviously been in the camp that it's a routine pullback, which thus far is the case. It's maybe looked a little more painful and been a bit more methodical than others, sometimes in those like August 5th or other, geopolitical, like in April of last year events where there's a big capitulation, liquidation, margin call, you're looking around and you're like, okay, you can get more comfortable bidding because it feels like a bigger cleansing event. You see more fear, more panic. But in this sell-off, it's been more methodical, and wondering just how you see the next, couple of weeks. If we often revisit lows, so maybe it's in a week or two, or it's in a month or two. So there's that in the back of my mind. And then it's also like, we did have a couple good days of good rinsings, but it didn't feel as climactic. Is that something that you require in to go kind of full on bull? Are you thinking, I'm going to size up my SPY here and play for a bounce and maybe trim after a couple points and look for a retest? Like, how do you think about playing that in the next few weeks?
It's a great question, because the conversation in my head has been about how unsatisfying buying the dips have been, because we haven't had that situation where there's an all-out pre-market spill. Mm-hmm. Right. Like, I don't know if you saw my tweet this morning as the market was coming off with, the data heading towards the open. I'm like, please let this thing tank 100 points right now. Like, let this thing gap open 100 points lower. And then I'm going to put my chips on the table and I'm going to walk away from the screens for 4 hours. You know what I mean? With this, when you're kind of grappling at the lows, like, it's not over. But what may be over is that, the one thing that's major for me is that we keep carving new lows in the S&P and the VIX, like 25 and back down, 25 and back down. Right? So people are hedged. It's obvious that in all that put volume, things like that, the sentiment readings are all historic red line, as bearish as can be. So the one thing that's on my mind that might add to this conversation is, Trump obviously going for the campaign and into his second administration, never said a word about the S&P. Stuck out like a sore thumb. It turns out that he knows the tariff conversation is going to derail. What did he see going into before he said a word about the tariffs? Markets just kind of chugging along at the highs. So he knows that the conversation is going to derail that somehow, has to. And that's why he didn't say anything about the stock market. So now my question, the conversation in my head is, okay, he knew that was coming. Is that it? You know what I mean? Like, he's shaking up the tariff conversation. Nobody knows which way to look yet, which means price in peak volatility over this. And the S&P backed off 7%. And I'm wondering if that's it. Am I allowed to wonder if that was it? You know what I mean? Like, so, when the risk reward lines up and then you get all these other stars aligning, the AAII bulls is, down into the teens. The bears is up into the 30-year top of the range AAI bear index, right? We've got these cluster of tick index extremes at the lows, right? Around minus 1400 and greater. People are visibly blowing their brains out. It's just a question of how far it's going to go. So if it starts to turn out that things bounce from here, where it doesn't show, I'm not going to put my money on the fact that we found the bottom yet, because like you said, we haven't had that capitulation. So feels like maybe there's more to come, but we're probably going to still look back on this and find it to be either a short-term or a long-term buying opportunity. I just don't know if we found the low yet.
Yeah, I was just going to say, I feel like, I jokingly tweeted this yesterday, but like, do we just wait until we get the headline from Trump that just says buy? Because I feel like there's basically two routes we can go here. You can either, get the hero bottom tick and fade the sentiment like you're talking about here, knowing that the other side is coming and it will improve. Like, I think all three of us agree that a recession is entirely unlikely here. So, you got to be ready to catch that eventually, or you just wait for the narrative to shift from Besson and Trump, where they move from, like just in the last 24 hours, Besson's talking about there is no Trump put. So it's like, okay, well, they're not ready yet, but it's obviously going to shift. So you either just fade the sentiment to catch the bottom tick, or you just wait for that trigger and then you just ride it when it's time.
Totally. Like, can you imagine if Trump comes out and says, boy, that 7% pullback wasn't too bad on the tariff talk, right? Like, and, you would be like, you would be, admitting that he like got it all out and this is it. We're going to talk about 25% with them, 10% with them, and we're going to go back and forth and the market's going to be unhappy. Sorry. Think about all the dollars that are going to fall back into the U.S. pocket. Think about all the onshoring of industry. There's already car makers announcing, okay, fine, we'll build the Hyundai in the United States. You know what I mean? Like, there's stuff going on left and right that's going to move like glacially slow, and so that's the thing that's going to really contribute to the U.S. economy. I can see a situation where that takes years to start clicking, but I think it's going to click. And if that's the case, then you're going to want to be buying one of these dips in the stock market. I'll tell you that. So that's what I think anyway. That's how I'm going to play it.
Yeah, my outlook is that it's a big chop fest for large parts of the year, because I think it could frustrate. I mean, this has been frustrating for many, but I think it could continue in the sense that, okay, there is this digestion as we move from, a handout, public government-led economic growth, environment to private sector productive, innovation, deregulation. And to me, that's not a 1 quarter thing. That's like a 3-4 quarter thing. And, that we're hearing that in their rhetoric. And so you might have a case where, okay, earnings maybe slow a little bit. The S&P was really, at its kind of top of the range valuations, and we just need to digest this. But it doesn't mean, it's 2008 crash coming. And so you might just get 10% pullbacks this year with right back up, and just this big overall digestion period. And that's because by the time the Uber bears get back in, we're I kind of vision us back to the highs. Maybe we back off again. Some sort of just more difficult environment than up only that we've had for the last 3 years.
So let me push back on that a little bit, right? Because I think that we are in the 7th or 8th inning of squeezing through a very painful and serious regime change dip, right? Like, it had all the trappings of the lead in, there was an explosion in activity and breakouts as soon as Trump got ahead of Kamala in the polls in October, right? Money was coming in. There was money coming in for all of the anticipation, and then Trump won, and then there was money coming in right after he won. That was December. Then we had money coming in for first of the year allocation. All that stuff is getting rinsed. The market's dealing with, okay, this guy's the secretary of this. That's going to mean this. This sector's got to do this. This is going to blow up and change now. And the whole tectonic plate is shifting. And then when that's over, the bull market is going to resume, and it's going to go up, up, and away. And it's going to be from the bottom left to the top right-hand side of your screen for several years after we get through this volatility period. That's what I think could happen. And I just think that and I didn't mean to push back about the idea that there's going to be some volatility. I think that we're nearing the end of that volatility, and by the second quarter, find a low and start the next leg of the rally.
Got it. That's
just what I think.
I love the independent thought. I haven't heard that take.
I just made it up. No, I'm just kidding. No, this stuff you've been thinking about. When you're walking your dog, you're like, how could this pan out? What about the timing of stuff? I like to. The dog walks are good because I take the real deep, just 30,000 foot view. I don't have the last sales in front of me, and so I could say, all right, what's gone on? No, like over the last decade, what's gone on? And think about it that way. That usually helps.
Hey everyone, this episode is sponsored by Ledger. For the past decade, Ledger has been the global leader in digital asset security, trusted to secure more than 20% of the world's crypto assets. Celebrating 10 years of innovation, Ledger is making digital ownership more secure and accessible with their latest products, Ledger Stacks and Ledger Flex. These wallets feature the world's first secure touchscreens, simplifying your digital transactions while ensuring uncompromising security through its Ledger Secure Chip and proprietary OS. Plus, with the Ledger Security Key app, you can say goodbye to traditional passwords and step up your digital protection. Your entire crypto experience got a whole lot easier. Ready to protect your assets? Choose the most trusted name in hardware wallets, Ledger, and take control of your digital security today at ledger.com. All right, back to the show. I want to shift gears and hear you guys' thoughts on the bond market right now. Contextualize it by the jobs report that we got this morning. The headline number came in a bit soft below consensus, but it felt like going into it, the whisper number felt much lower. We had the ADP print that missed pretty significantly. A lot of doom whispers there. The unemployment rate did tick up a little bit, but overall, it was interesting to see the mixed bag results compared to the bond market price action. And it's been all over. It changes every 2 seconds right now. It feels like, but yields cratered pretty significantly for what felt like the expectation for something that was weaker than what actually came in. We've seen that reverse now, but yeah, how are you guys thinking about the bond market as it stands here?
I mean, I don't see it as easy of a trade here. And I think what also matters is how you're positioned the rest of the book, because the correlations, you got to be careful, right? Because we're in now what looks to be in a risk off scenario, bonds rallying, yields down. And it has been fairly mechanical in terms of yields up, yields down, stocks down. So I'm kind of observing here. I caught a big chunk of the long 2-year move and covered that at 3.9, because it's like, all right, how much is the Fed going to cut really in the next few months? And sort of wait and see. I would love to get another Yeah, oil, like again, looking at the inflation outlook, to me, oil bottom of the range. I kind of think next week's a soft CPI. That's why I'm sort of feeling a bounce here in broader risk. Like we've been selling off for days straight, and I do think next Wednesday is a soft print and kind of gives the bulls hope. We just had a good labor data. We just had what I think will be a soft CPI. So those are sort of the makings of what a turn in the data and a positive inflection would be. So I'm sort of just observing on the bond market. Sort of taking Besant and Trump at their word that they have a plan and want to get yields down. And I think that's tough to fight right now.
Very interesting. Let me start by saying that, I don't have a skin in the game in the bond market. So my opinion is worth nothing. Right. And I'm not an economist either, but like, if I look at this bond market from kind of the same way as we're going to go through this regime change where the new regime wants lower rates, lower dollar, probably going to figure out how to get it there. What they're swimming upstream against now is what's left over from the last regime, which is, I still think, a lot of residual inflation. That's still on its way down towards, I guess 2% or something like that. And I think that the combination of Besant's desire for lower rates and the view on the oil market and what I think could happen. I mean, if oil breaks the bottom of the range at $62 and nosedives, I don't see why we can't go down and trade in the 50s for a little while, which should take the sting out of the inflationary side of the equation for me and give me a chance to get bullish bonds if Besant is going to keep rates low. So that's just one scenario that I have. And like I said, I don't take risk in the treasury market anymore. I won't say that I've gotten killed or done well or whatever, but when I use it as a speedometer against my equity trades, I can be a more profitable trader. And there's a whole podcast that can go on behind that, but I use those as like sort of dials on my speedometer and just admit that I'm an old school equity guy.
Yeah, I think it's definitely we've been in this period where the bond market kind of chops around and then makes a big move in these risk off. Lately, it's been down, after the bottom in September, screaming higher plus Trump victory, repricing growth. And it seems like it's like a 3 times a year trade, really fat pitch. And, you're doing a whole lot of nothing in between.
That's fair.
Mm-hmm. Yeah. Tony, what was your take on the OPEC announcement that came out this week where they're finally increasing supply there? Is that just driving your view of lower oil?
Yeah, and I'm not like a chest pounding bear. I just, I don't have a position in oil and I haven't had one in the longest time. And that sucks for me because I can have the most risk I can possibly tolerate in the oil market and sleep like a baby. Yeah. So I'm really sad that there hasn't been an opportunity that's lined up in my mind because that's where I like to send it in. So I literally haven't had a risk on an oil market in 6 months. So when I look at the chart and I'm like, okay, if I'm going to be betting money here at the tables as this thing is crashing, there's a really high probability chance this thing crashes through the bottom of the range here. Right. If there is that economic slowdown, the numbers get a little weak, there's a little more production here, another OPEC output, the range bottom break, and that's deflationary. And I just try to think of like what that can mean for the rest of the market, right? It's probably good for their, bullish bond scenario, good for their lower dollar scenario, probably helps stocks not implode if rates are going down. So I feel like they got to try to, wash one hand with the other a little bit, if that's fair to say, Felix.
Yeah, it's so bullish if oil breaks down because then you can have Besant and Trump start ragging on Powell to bring the front end down. And Tony, are you still doing the little shill, but the oil ground up?
Yes, I am.
I love those.
Yeah, they're pretty good. We have really good guests. I just interviewed Joseph Schachter yesterday, and that guy is a fountain of information.
Do you get his reports?
No.
I'm on this email list, but yeah, they're good.
Do you like them?
Yeah, I haven't subscribed, but they're timely. Like he actually just sent out a buy report on crude and a number of other equities, which that's what I wanted to do, especially at the futures positioning got down way lows. It's like I sort of expected a Trump Besant deal with the Saudis and Russia in terms of bringing more output. So I have a little bit more sort of fundamental bias long oil here and quote unquote inflation protection. But yeah, it's hard to fight that chart. It's pretty
That's
ugly.
exactly, you just took the words out of my mouth. I was like, Joseph gave a really bullish, a compelling bullish scenario yesterday, outlined that he had a couple of Canadian E&Ps that were trading at absurd prices for him that were triggering like buy. This is like a 5-star buy. And I'm like, fuck, I can't get over this flat bottom in the chart. If we break this thing's going down $20. I don't care what anybody, you know what I mean? So,
Yeah.
And I'm not arguing with him. I hope that he's right. He's an outstanding individual in the markets. I'm not fighting his view at all. I'm just like, the low-hanging fruit for a trader is the bottom of the range blows out and everybody piles in short. So I have no idea what to think about it. I'm on guard for that. I'm on guard for his bullish scenario to play out, and I'm making sure that I don't get in the way.
Yeah, the one thing I have liked about buying crude futures in the last year and a half, even though it's not been a pretty momentum market, is there's you're getting a positive roll yield for basically consistently the last like year and a half. So if you are bottom picking that range and you're buying mid 60s and selling mid to high 70s and collecting like a 2 to 8% annualized roll yield, it's interesting.
It's compelling because it's super compelling. That's such a great point, Quinn. It's super compelling because we haven't gotten, there's no trade for the oil trader, for the massive oil ARB guys, and the spec guys, I mean. You know what I mean? Like when oil's going down, they put it in shoe boxes and put it on a float and send it out on the barge that make the spreads. You know what I mean? When there's nobody in there, the spreads just sit at their natural backwardation, and you can sit in there without getting killed before, when positioning gets too long, there's about to be a rug pull in the spreads, you know what I mean, at some point. So that's a great point where they're kind of just in this natural zone right now, and they're not that affected by this enormous spec position. So that's a great way to whizzle your way into a potentially winning long oil position. So
yeah, buys you a little margin of safety.
Maybe hard positive carry is a beautiful thing.
Yeah, it is. And two, through 22 and 23, I know we're in maybe a little slower growth environment and a different regime, but it was the best hedge in the world in 22 and 23 for risk. So it's like, we're clearly in a different environment there, but I that hasn't left the back of my mind. It like I'm looking for that regime shift again is the potential red flag. So that's why I'm sort of positively biased towards having that tool.
Dude, if you would have told me that Bitcoin was going to go from 100K to 80K, the S&P is going to go from 6,200 to 5,700, and oil's going to stay 65 but at 70, I would have been like, no way, dude. They're going to mash the shit out of it. You know what I mean? And this thing ain't going anywhere.
Yeah. It's a weird contrast of good fundamentals, but just dead money for a while.
Yeah.
Tony, what subsectors are you fired up on for equity if that's the dead money over there right now?
So I'm doing it by the charts, man. I've been in the software sector since Mark Andreessen wrote an article in the Journal in 2011 called "Software is Eating the World." And I trade around that position just because I'm in the flow of watching the daily tick-tock of it, right? So that's pulled all the way back into trend, the 200-day moving average. I mean, I think we broke them all today, but it wouldn't be shocking for security to, trade that level, break it, mingle around it, and then rally. So software is one. I put, today I outlined the bull case as best I could in my note, and I added 4 sector charts that I thought were valuable versus their peers on a strictly technical basis. Right? Wipe the ticker off of it and just look at what this thing did. Because I don't want somebody come back, yell at me, "You start bullish airlines now, you fucking idiots." Like, dude, just do me a favor. Okay. I'm talking about the chart. So I put up software. I put up industrial miners, also pulled into a huge support level, didn't break its sideways range, broadly speaking. There's a couple of things that you can line up the risk reward, and that's all I can do right now. Right? When you don't know what's going on, it's like, okay, what gives me a good chance to not get my ass kicked? What's into support already? What's already gotten the piss taken out of it? So I came up with software, industrial miners, airlines, and on my radar screen is home construction. Home construction has been, it's a huge secular bull market. If you just take a big step back, we've had a typical pullback that looks like the range broke, like the trend broke, like all the rest of them. And now rates are imploding. So every time that's been the signal where they finally level off. And then when rates stay down and the stock market rallies, builders really perform. And so that's lining up to me as a potential trade. So I put those 4 out. I put some actionable trade items with them, and I'm going to trade them all myself. I don't care what my newsletter readers do at this point.
I like how you in the Navigator, which folks listening should, if they're not familiarize themselves with. Tony does an awesome job of delivering these prescient insights. But I liked how you framed the risk reward, because that's a lot how I view whether it's a 2-year trade or a 2-week trade, framing the probability distribution and what your levels are, what your invalidation, both from a qualitative thesis driven, but also a line in the sand on the screen. And I think you did a nice job. You have these parts of the market that have real tailwinds, and if, maybe you could say baby thrown out with the bathwater, looking like good spots to take a crack. Even if it's a bounce, right? Like we've sold off hard. You're not making any proclamations that this is the, a moonshot to all-time highs. It's like, hey, let's take a swing here. Maybe we can clip 5 points and take the win if we want to in a week from now.
You make a great point there, because this is not a buy the highs looking for higher momentum trade, right? This is a buy the steep puke. If you get paid so fast that you're not afraid to let it out, right? Yeah. We're doing so much sweating down here. There's so much agony. I'm taking so many walks with my dog. I'm losing my shit. I'm drinking so much Red Bull. You know what I mean? Like, this is all got to calm down eventually, and you get paid. So as these things rally towards resistance, you're like, take half, right? Yeah. Take half, move my stop all the way up to here, and just whatever happens, right? So that's a good point where this will, like, I wrote about that too today. I was like, look, man, I'm doubling down. This will happen fast, or we'll be out by next week, right? So let's just do a couple of days of sweating like men and see what happens. So my last thing is, like, I equate it. I can't help, and I wrote it in today's note. Everything is a blackjack hand to me, because it's like my favorite game in the world. I love Vegas because I love sitting at a blackjack table for 6 hours in a row. But everything is like okay, what hand is this, and what are you doing? You know what I mean? Like, I don't care if you're down a couple of grand, you got 9s against the 6, you got to split the 9s, even if you have the table max bet on there. It doesn't matter, right? So what are you doing here?
I love that analogy.
I think that's important, because people get emotional. We're humans. It's you're very liable to bring the P&L, the numbers, the emotion into the game, and that's when things start to go south. I mean, you take one on the chin on a long that's underwater, like, you have to be analyzing what's in front of you and kind of putting that behind. And I love that analogy where it's like, I don't care if I max bet, but I got to do what the odds say here. The odds say
bank machine. You know what I mean?
Yeah.
Hold it. That's why, by the way, you never go sit down at a blackjack table without enough cash. You know what I mean? Like, you got to be able to have whatever. You got to be able to have 10 times what you're willing to lose in your pocket, just in case you're down a couple of dimes and you got a couple dimes in the felt and you get a pair of 9s against a 6. You know what I mean? Like, you got to be able to do it. It doesn't matter. That's why you got on the plane, right? To get that hand. So
and you need enough runway to let the odds play out too. You got to be able to hit those probabilities enough times for it to play out. If you just try once or twice, you're not going to catch it.
Yeah, man. Yeah, I've got, how many times I've gotten max long and back down to size down here, max long, back down to size. Sometimes you're kind of flipping it out on a bounce because you have no confidence that it held yet. And other times you're walking the dog and praying that it doesn't go any lower. You know what I mean?
I got to say, TG, though, that might be bad advice for the crypto listeners here, because they'll walk up to the table with 10x their hand size, and they'll dump it all on the first run. I was just going to say, the idea is to have the bankroll, right? You got the playing money in your right hand pocket and the emergency reserve in your left hand pocket, and you don't ever go to that one if you can help it. Our crypto listeners will put the full thing down and then get some margin against it.
Absolute maniacs, man. But I think that what's cool is, so this thing I think is relevant while we're on crypto, is that the fact that we've seen like what's the total ETF inflow? Isn't it 32 billion or something like that? That's roughly the number.
All-time record.
But in the first year since they announced the ETFs, there's been like $30 billion of inflow, right? So my point is, there used to be the biggest position in Bitcoin was the hodler, right? I'm just saying, like, the most number of dollars for that, for a lot of this ride has been the hodler, right? We're never selling this, et cetera. There's $32 billion in this thing now where I don't give a shit what anybody says. It's a line item on someone's P&L. People are going to have to be responsible for this line item. This isn't, Joe Sixpack who had 100 grand and turned it into whatever, $1 million in crypto and doesn't have to do anything anymore. That's not the case. These people are marked to last sale. And when that position line item becomes too stressful versus the portfolio of other line items, they're going to sell it. They're not in it. Not one entity, not one corporate entity bought Bitcoin saying, yeah, if this goes to zero, we're cool. Like, are you fucking kidding me? Like, no, seriously. Like, nobody's letting that $32 billion evaporate. It's going to be cared for, that $32 billion. Trust me. So that's just my point. The balance is changing a little bit, and I don't know, there's probably still a lot more hodlers, but now there are sane risk managers involved. There are adults in the room with long positions, and that's all I'm saying. That's a change. I'm not saying plus or minus. People should realize that. If they don't, they're missing a piece of the pie.
Yeah, I think the market structure over the last year and a half since ETF's launch has proven that in spades, right? I mean, there's a premise within the industry to rely on past cycles as being gospel, and this one has blown up every ounce of that in many ways in terms of which assets outperform. Okay, Bitcoin runs, and this part of the market runs, and it's this, as if it's this God-given, truth in reality. And the ETFs and market structure and equities are risk off. That's going to get sold too. So it's I think it's been a wake up call for many, and just it's a maturing thing. It's good.
It is. You know why? Because the guys now. When I sold my crypto in my newsletter, I was like, all right, it's not doing anything, but the egg timer's up. This is up. I'm selling it. We took 35% or whatever. I'm gone. People are like,
you don't get it.
Let me explain this to you. I understand that you sold it. Okay, that's fine. But let me explain. That's not how this works. But so to your point, you go back to them now and they have a conversation about that. And you just look at them like this. I know. Yeah. So I'm just saying, like, they're learning now that, like, oh, fuck, I think I've told them 4 times now, you don't understand. It's like the sign that the thing's about to go down as soon as everybody attacks me with, you don't understand. So funny story, right?
I've always been a big critic of that. It feels like, every asset gets to have that fast money correlation thing. And then Bitcoin is this special thing that has special rules to it. And, it's God's given right for it to hit 150,000. It's just predetermined.
I've seen this before, dude. I've seen during the .com bubble, there were guys that were long these stocks, crazy bubble internet stocks, SDLI and all the craziest shit that you've ever seen. And they made so much money on them that they would literally, you'd be talking to them about the stock and they'd be like, yeah, I mean, I can't, it's never going to go back below 100, right? Like that we know. And you just look at the person like,
do we?
Why not? And next thing you know, you see this internet stock plunging through 20 in 2000, in 2002. And you're like, boy, I hope that guy got out, but I bet you he didn't, right? Because when you think it can't get below 100, you're in shock when it trades 85. So that's the kind of religion that we had in Bitcoin for quite a while, but I don't think it's there anymore.
No. Yeah, it's being shaken out.
Maybe last thing, and we might have covered this in the sectors you like, but what I was looking for in this downturn is like knowing what's going to perform coming out is like the relative strength idea, and seeing if there would be any leadership changes, which is why I want to lean towards your side of the bullish ledger, because with this not being done on a medium horizon, because there wasn't that I could see a real change in leadership. It wasn't like, tech sold off, but commodities and energy went higher, or any sort of big structural things like that. And so I'm kind of wondering if you think NVIDIA leads us out, or if you think it's software, Or you still think semis are kind of a funding?
I do. I still think that the market broadly speaking, is just like overly long those. And that was the one call that I've gotten right at that. I thought that sector would be a source of funds. Whether it came at the expense of the whole tape, I don't know. But whatever, the semis were a source of funds. They went down. So at least that kind of idea was right. But when I look at look at what happened this week and the most volatile week we've had, this damage is all, aside from cannabis because it's open, but this damage is all, it's all techie stuff. It's cloud storage, semiconductors, financials got walloped this week. And then there's, airlines that also got walloped this week, but some of the other stuff didn't do as bad. You know what I mean? Like there's positive sectors in home construction, gold miners are positive. Social media is positive. Healthcare is positive. So there's a couple of redeeming qualities to say that it's not an all-out market crash anyway.
Mm-hmm. Yeah, no, I think that makes sense.
Nice.
Yeah, they'd be, like if this were going to be an S&P crash, I'll say this. On a week like this, if the S&P was going to crash, all the sectors in my sector watch would be negative this week and bleeding. Right. You know what I mean? All of them. It's not like that. It's a clear, performance band. Yeah. So that's why I don't see a crash happening, and I can at least think that buying the S&P, broadly speaking, is okay right now.
Yeah, I was kind of that was the other thing. I was kind of waiting for gold to start getting clipped too. To that would be a day I want to be buying, right, when everything gets thrown out. But we haven't had that yet. It's still rotational. It's not pukage. Dude,
come on, like we would have hoped for. The dollar's off 3.5% this week. Bloomberg Commodities Index is up 2%, and that's with oil going down.
Yeah,
there's money going into other things. There's other trades happening, and there's other breakouts. So I think the idea is not to overstay your welcome in too many trades, right?
Yeah, good advice always.
Yeah.
All right. My last question for both of you for parting words here. What is your one tip to keep your emotional composure when vol is this high?
Dog walking.
With the accessory or no?
Nah. No, that's for after the bell, man. I trained myself to wait for this long. It's habitual now. So
that's what I learned that at out west. They call them the dog walkers.
Yeah. Oh, that's great. In all of the dispensaries, they have dog walkers, and I do buy them. By the 10-pack because they're amazing packaging. They're amazingly built, and right after the bell, we go out with a pack of those.
Yeah. Up here in Canada, I've heard it be called a safety meeting too.
Yeah. That's because you got all the lift bombs, the ski hill guys.
Yeah,
that's true. Amazing. Yeah, it's attitude adjustment hour. That's for
sure. We're in store for a couple of those. It's Friday, guys. I mean, no, my technique is just keep your routine, no matter how stressful or tired you are. It's Thursday, it's Wednesday, it's Thursday. You just, put in some long days. It's keeping that routine, whether that routine is the same wake up time, it's the working out in the morning or in the evening. It's all of the kind of mental health, you don't necessarily do them for mental health things, but they are there. And for me, it's yoga once a week. It's a couple runs, a couple bikes, a couple lifts, and, sticking to that routine as much as possible. Cause you can get so bogged down staring at charts where you feel like you need to flip through 10 more and run a couple more analysis. And you don't realize this diminishing marginal returns, environment you're putting yourself in, that's starting to negatively affect your composure and stability. And so for me, it's maintaining that routine, really true.
Yeah, man, you got to let the air out of the pressure cooker any way you can, because it'll help you make better decisions. I was just going to say something like that. Like when I know that when I remind myself, like, all right, after the close, I'm going to just look at a couple charts, go to the gym and cook some dinner. And at 6 o'clock, it's like, all right, dude, go work out. Okay.
Yeah.
Put the fucking computer down, go work out, and eat something.
Yeah.
So yeah, that stuff is the best. And then eventually you get your mind off the market though. And then it gives you a chance to reset. If you don't take your eyes off the tape, you get like asphyxiated.
100%. Yeah.
Tony,
it's awesome to have you on here.
Oh, Felix.
Yeah.
Quinn, you guys are the best. This is really one of the funner podcasts that I've ever go on. So anytime you want me back, man, at a moment's notice, I'm here.
Love it.
Yeah, we'll do. And give a little shill on, we talked about the Dirt Nap, but we like what you guys are doing. So make sure, let our listeners know.
Oh, thank you very much. Yeah, man. Listen to the Macro Dirt podcast with me and Jared. Like and subscribe. We're getting great feedback. People are really what people are appreciating, and why we put it online is because no matter what, it is a half a century worth of experience, worth of masterclass market talk. You know what I mean? There's not going to be too many, conversations with guys like us that had similar seats that are kind of hashing this out in all totally understandable, fun terms. So that's where we think we're trying to bring value, and we're going to keep doing it for as long as we can. So thank you for giving us a plug, and I'll definitely have you guys on the show one at a time.
Yeah,
you guys are awesome.
We should maybe we even do a little collab, because I could, me and Felix.
Let's get Jared on here too.
Yeah, me and Felix could use the. I like the names you guys got.
The name calling.
Each other.
The name calling is awesome. Yeah.
Dude, it's so funny. For every one of those, there's somebody that whines about it. For everybody that likes it, there's someone that whines about it. For everybody that's like, dude, we love that you guys just speak your mind. It's like a breath of fresh air. Yeah. I get an email that says I'm unsubscribing because I'm upset at what you said in the podcast, and I need to like.
Oh, well, call Jared a bad name.
Yeah. I don't know. I mean, you can't figure out what you do that's so offensive sometimes, but you got to have guardrails up everywhere. That's kind of what I'm learning.
Yeah, exactly. Love it.
But we'll get that
right,
done.
guys.
We'll do a 4-man on the podcast and have a great time.
That'd be incredible.
Sounds
all right,
good.
Guys. Have a good weekend. Take it
Awesome.
easy.
Yeah, see you, boys. Take care.
Later.